Okay, so I want to talk about the reason your prospects say, let me think about it, and then they never call you back. And I know and I recorded a video on this recently. I know that some of you think it's price. It's not the price. It's the equation running in the back of their head. And today I'm going to show you exactly what that equation looks like, where you're losing points on it, I guess, every single call, and how to fix it before your next appointment. And Alex Hormozi is who I got this from. And inside of like one of his books, he lays out something called the value equation, and it is 4 variables. And that's it. It's just 4 variables. And every single prospect you sit in front of is calculating this equation whether they know it or not. So you knowing the equation, even if the prospect doesn't know it, puts you at an advantage. And when the number comes out high, they buy. When the number comes out low, they stall. They give you an objection. So, and this is something I said very recently in one of my videos, price has almost nothing to do with it. So let me walk you through the 4 variables, and then I'll show you how each one plays out when you're sitting across from a family talking about a $250 a month whole life policy, a term policy. So variable number 1 is dream outcome. So what does the prospect actually want? Not what you're selling, what they want. And here's where most life insurance agents mess this up, like on the first move. You walk in and you start talking about a permanent policy with cash value accumulation and a death benefit and living benefits and paid up additions. And the prospect is sitting there just thinking, hey, I just want my kids to be okay if something happens to me. That's the dream outcome. Kids okay, house paid, wife not scrambling, that's it. The product is the vehicle that gets them there. The dream is the destination. And if you spend 45 minutes describing the vehicle without ever painting like the destination in the prospect's own words, the top of the equation just stays flat. Like, doesn't matter how good your product is, their dream outcome in their head on that couch or in the kitchen table stays vague. So the first move on every appointment is to get the prospect to articulate their own dream outcome out loud in their own language before you say like one word about the policy. Ask them what happens if you don't come home tomorrow. Ask them what the kids' lives look like 6 months later. Ask them what has to be true, financially at least, for their spouse to sleep at night. And when they say it out loud, the top of your equation just kind of like tripled, right? So it's the 2 variables are on the top, variable 1, variable 2, variable 3, and variable 4 are the bottom of the equation, okay? So we just finished variable 1. Variable number 2 is perceived likelihood of achievement. And this is the one that almost like nobody talks about. And it's the one that, I would say murders more life insurance sales than anything else. And it's like perceived likelihood in a nutshell means, in the prospect's head, how sure are they that what you're describing will actually work? Because you can paint the most beautiful dream outcome in the world, but if the prospect has like 1% belief that it'll actually pay out when their family needs it, the equation sort of like collapses. And here's the fact of the matter, most Americans have some story in their head about insurance companies denying claims. Some cousin, some coworker, some news story. So when you sit there and say, hey, and if something happens, your family gets $500,000 tax-free, a piece of them is thinking, yeah, right, like what if they don't pay out? So you have to raise perceived likelihood of achievement before you ask for the close. And you do that with 3 things, okay? You can talk about carrier ratings, right? Say the carrier rating out loud in plain English. The claims paid numbers, right? These are public numbers that you can go on your carrier's website and check them out. Like the actual dollar amounts the carrier paid out last year. And also like your own track record. The families you've personally delivered checks to, death benefit checks to, or living benefit checks to. So if you've delivered a death benefit claim check, tell that story on every appointment, and not as a brag, as proof. Like the prospect needs to see in their head the check arriving. Like it's not a promise, right? Because you're promising them a death benefit, but they have to see a picture. And when they can see it, perceived likelihood of achievement goes from 30% to 90%. And the top of your equation, once again, multiplies. Now, the bottom of the equation, right? This is where it gets interesting because most agents don't even know these variables exist. Variable number 3 is time delay. Like, how long does the prospect have to wait to get the dream outcome? And in life insurance, I would say this is a little weird one because the outcome the family cares about most, the payout, hopefully never even happens in a way they experience at least. So you think about time delay as infinite, right? And it's wrong. Like the time delay a prospect actually feels is the time from signing the application to feeling protected. And so if your process takes 8 weeks of underwriting and blood tests and APS requests, I know that some carriers have like long phone interviews back and forth with the carrier. That 8 weeks feels like an eternity to have to a family that just decided they needed coverage. Like every day of that 8 weeks, the prospect is questioning whether they made the right call or not. So like how do you shrink time delay? 2 ways, okay? So first, you can try to have like some accelerated underwriting products for like anyone healthy enough to qualify, like the ones that have like no exam, no APS, like no blood, no urine, and you can have a decision in days, not months. Second, put temporary coverage in place at point of sale. And most carriers will like bind a portion of the coverage immediately when the first premium is paid. So tell the prospect, hey, before you sign here, understand that from the moment you sign, your family is protected up to this amount, effective today, while we finish underwriting, right? And that's like the conditional coverage. And so that single sentence collapses time delay from months to minutes in the prospect's head. And so the equation, once again, moves forward. The equation, the number gets higher. And I think for a lot of carriers, simply having like the bank account on file, that allows conditional coverage to happen. If God forbid something happens to the proposed insured before the application gets approved and the policy gets issued. And so variable number 4 is effort and sacrifice. So what does the prospect have to give up, put up with, or work through to get the outcome? And this is where agents, I guess, like shoot themselves in the foot without realizing it. You walk in with a laptop and you tell a prospect, okay, I'm gonna need 3 years of tax returns, a copy of your driver's license, a voided check, permission to pull up medical records from these 4 providers, a 2-hour paramedical exam, and by the way, we'll need to schedule a follow-up call next week to review the illustration. The prospect is exhausted before you even opened the illustration. So effort and sacrifice just spiked and the bottom of your equation just doubled, which means the total value just cut in half, right? So you have to actively shrink effort and sacrifice. So the top 2 variables, you have to increase them, right? Dream outcome and perceived likelihood of achievement. And then time delay and effort and sacrifice, you have to decrease them. Does that make sense? So going back to what we were talking about earlier, you do the paperwork, you pull up the records, you show up at their house, at their kitchen table. At the time that's convenient for them, obviously. You do the interview together if you have to do a phone interview. So you make it so the only thing the prospect has to do is sign and pay. Every friction point you remove is the point like back on the equation. So here's the whole thing kind of like put together. Dream outcome times perceived likelihood of achievement divided by time delay times effort and sacrifice. So those are the 4 variables. When a prospect says, hey, let me think about it, they didn't run out of money. The equation in their head just came out too low. So your job on the appointment is not to lower the price. Your job is to work all 4 variables. So increase the dream outcome, increase the perceived likelihood of achievement, reduce the time delay, and reduce the effort and sacrifice. So get the prospect to articulate the dream outcome in their own words, raise perceived likelihood with carrier proof and your own claim stories, shrink time delay by the conditional coverage, and shrink effort and sacrifice by absorbing the friction yourself. So now the equation is running like at full strength, I would say. Dream outcome would be high, perceived likelihood would be high, time delay would be low, effort and sacrifice low. And the price hasn't changed. The premium is exactly what it was gonna be at the start of the appointment, but the value on the other side of that price just went up by a factor of 10 in the prospect's head, and that's why they signed, because you thought about the dream outcome, the perceived likelihood of achievement, the time delay, and then the effort and sacrifice. So run this on your next appointment. Before you walk in, ask yourself, what's my plan for dream outcome, what's my plan for perceived likelihood of achievement, what's my plan for time delay, what's my plan for effort and sacrifice. So 4 questions, 4 levers, pull all 4 and watch what happens.